Okay, everybody comfortable? Great, nice to see you all in person after years on Zoom. So like Nimrod said, we've experienced an incredible year in terms of IPOs, 60 plus and counting, and we're not even at the end of the year. It's more than double what we had last year and more than triple what we had in 2019. So we're part of a huge phenomenon, a huge wave. The question is, will it last? What works? Why did it work? We'll get into it. But before we start, I'd like to have each one of you introduce yourself, your company, where you are in terms of IPO, thoughts, plans, post-IPO. Take it away, Sal.
Cool. Hi, everyone. Yoskovitz, co-founder and CEO of Augury. Yoel asked earlier, how are you going to change the world? So at Augury, we imagine a world where people can always rely on the machines that matter, right? Where water flows and is accessible, where power is reliable, where you can always get toilet paper in the supermarket, where we can manufacture vaccines at scale and deliver them. And that's what we do, right? We work with leading manufacturers to make their production lines more reliable and more productive so they can restock the shelves in your local supermarket. We work with the largest pump manufacturers to make sure that their machines are reliable and sustain life. And then recently, 2 weeks ago, we announced a funding round with 2 strategic investors who will take us into the energy sector, into power generation and power transmission to help the world and that sector also become more reliable. So that's us. We're a 250 people company. We raised $180 million just 2 weeks ago. Small note, 2.5 years ago, I was at this conference. We were selected as one of Israel's top growth companies. That's where I met Sivan. A year and a half later, she invested. She and the Kurma team led our Series D round. So I think I owe Khalkhalist a finder's fee.
All right, thanks, Asaf. Want to speak about your last year?
No. So I'm Asaf. I'm the CTO and co-founder of Riskified. We were founded in 2013. We IPO'd this year. We're in the space of risk management for e-commerce. We empower e-commerce in different junctions of the customer journey with different risk problems they have. But the main product is around fraud detection at the checkout. And basically, we get every checkout, and we tell the merchants, is it the actual card holder or is it someone that holds the credit card details or the payment method details by getting it, by stealing it or by faking it. And the unique model that we pioneered around it was a charge by guarantee, meaning that we are liable for our decisions. And if we're making a mistake, we actually pay them back the worth of the goods that they lost. That really allows us, in the end of the day, to take more risk in their behalf. And by that, we're actually ending up increasing the sales and the growth of these companies. And that was the main premise that we brought into this market, and that's how we took leadership over it. And yeah, we IPO'd in the summer.
Okay, we'll hear more about that in a bit. Asaf?
Yeah, I'm also Asaf, to make it easy on all of you here. I'm the founder and CEO of Minute Media. It's a company that we started in Israel 10 years ago. And we have built a technology platform that enables creation, distribution of short-form sports content. So I'm a big sports fan. That was the reason to start the company. Our platform powers 2 lines of business. One is our own digital content brands in sports. So we're one of the larger players in digital soccer or football, American sports, esports, and gaming. And then a few years ago, we also decided to open our platform up and offer other more traditional media companies, publishers, betting operators to use our platform on their sites to take their sports content experience to kind of the next level. Raised slightly over $200 million in equity, and same as you. We also have the privilege of having Kumra, Sivan, and others as one of our main investors. Still private. We'll discuss that later. And yeah, that's
also on Khalkhalist's list of most promising tech companies 2021. Yep. Sivan.
Hi. So, Sivan Shamri Dahan, I'm a partner with Kumra Capital. We're actually one of the first funds in Israel to recognize the opportunity around late-stage investments and to actually establish a dedicated fund to invest in growth companies. That was back in 2014 when there were very little late-stage investments in Israel. Obviously, today, the market is much different. In the past 2 years, we've had 23 companies IPO'd here in NASDAQ or NICE with accumulated valuations of $85 million and around $9 billion that were funded through the IPOs between them. So that's really a huge change. When we just started, we aimed to have 1 or 2 IPOs in our portfolio, and obviously this has changed dramatically. We are proud investors of most of the companies in this panel today. The ones that we're not investors in were here before.
Well, let's move over to Udi. Just a quick introduction.
Hi, everybody. Udi Mokadi, co-founder and CEO of CyberArk. I guess I'm on the veterans chair here. We went public in 2014, considered the best tech IPO of 2014. CyberArk is an identity security company that pioneered the whole space of privilege access management, securing the keys to the kingdom in organizations. We have over 7,000 customers around the world, half of the Fortune 500, and wake up hungry every day. I guess we're going to talk about that.
Sure. I want to start the next round of questioning with Asaf from Riskified. So you were part of the very recent wave of IPOs. Can you share a bit about immediate experience? How did it impact the company?
Yeah, everybody talks about the wave of IPOs, but as Sivan was saying, this is really a culmination of a transformational decade, really, I think, in Israeli tech, because it's the first decade where entrepreneurs and VCs were determined not to just build technology and sell it, but actually building scaled-up companies and becoming first-class citizens in this global market. And I think the IPOs are just a stage where we actually proved that it's happening. We all became part of that global economy in the most prestigious stock markets in the world. So the IPO itself is yet another milestone in scaling up the company the way we look at it. It's a way to develop the business, to accelerate the growth. On top of that, it's a super rigorous process. It's a process that allows you to get confirmation from the market that you're in this mature place. We were happy to do it. We were happy to gear ourselves towards it and to use the bars that they're staging to know that we are there. We came to it as a leader, and that was an opportunity because we were able to tell the story of this market and that category the way we wanted it, because we were the first one in the category. It was a lot of effort building up to it. We're basically, if you think about it, our margin is dependent on fraud because we're paying back the chargebacks and we're paying for our mistakes. So you need to gear up years before that to make sure that your control over fraud is constant over a period of 2 years for persuading everybody that this is actually a solid thing. On top of that, you're opening all the books. So that was an opportunity to show, and it was a challenge. The other big challenge was that the SEC didn't really see this model before. So we really had to work with the SEC to figure out basic stuff like how do you do accounting for this thing in a way that satisfies the market. So it was a lot of work towards it. right now, I'm actually really happy that we're back in, everybody's focused on keeping on growing the company, and our management focus is on the product and the suite of products, and how do we just give more value to our merchants and to our clients with the capital we raised and with the recognition we got and with the branding we have. So that's where we're going with that.
So Udi, I'll turn to you. I mean, you went public in a bit of a different era. Asaf described it as kind of a stage that you complete. Is it the same in your experience? Is it something that kind of put behind you already, or? Oh
no. So we went public 7 years ago, and it was definitely a culmination of wanting to build a real long-standing company. I think for many years, customers would approach me at events, and they would say, "Udi, I have a question for you. Are you going to be around? Because what you do is mission critical for us. Our systems rely on it. It could be a bank, it could be an airline, it could be a manufacturing company, a pharmaceutical company." And as a private company, we couldn't look them in the eye and say, "Yeah, we're going to be there." We could say, "We want to be there." And going public was really that effect that we had of it's in our power to build a long-standing company that can invest for the long term, that can really scale. Similar to what Asaf said, we built a category within cybersecurity called privileged access management. And so when you go out, you're actually nailing that category out there, and the customers were I would say, relieved and pleased that we're out. The employees loved it, and we used it as a platform for continuing to grow and scale. It's a point in time. Like when I welcome employees that didn't join the IPO party, and I just did the welcome like that yesterday, I said, "Look, we had a great party, but it's not about that. Going public created a platform for us to build a large company that you can be part of the next milestones of." So that's how we look at it, and it's not for every company. But I think if you feel like you have something that is qualifying for kind of a built to last option, then I would go for it.
Right. Excellent. We'll turn to Sivan, because you have a bit of a different perspective. And as a VC, some of the portfolios companies have gone public. Others might, in the future, some might decide not to at all. Can you share a bit of your insights on what the ones that did right in the process?
So I would say that as late-stage investors, especially with all these funds and money around in the market, I would like to take it back to the really core basics of what makes a company attractive to us, or what are the main ingredients that we're looking for. So the most important thing for us is a strong leadership, a strong CEO and founding team, but also the ability of the CEO to bring along additional strong executives to lead the company, to maintain the culture that usually the company has initially through the next phases of scale. Second of all, and it was mentioned here by Udi, is really defining a category, having a large vision, and eventually leading this category in a large market that keeps on growing. And then third of all is really the execution, being able to demonstrate strong growth year on year, but also be able to predict potential growth going forward, having a solid pipeline. Predictability is really key in companies that are planning to go public. And when we look at predictability, then in many cases we're looking to see expansion from existing customers, which pretty much fuels future growth. So a strong NRR is something that, net retention rate is something that we're really focused on looking at companies. So all in all, strong leadership, great vision, and really excellent execution is what we're looking for in companies. And I would say that to us, IPO is definitely an important milestone, but the real aim, and I'm sure that everybody on this panel will agree with me, is to build large, sustainable companies out of Israel.
Excellent. So, turning to you quickly now, you've decided for the time being not to go public. I'm sure it couldn't have been easy. There's probably a lot of temptation out there. What's the rationale behind that?
So I subscribe to the same philosophy that was presented here, right? We are on a long-term journey, and an IPO will be one step along the way. I think you need to ask yourself, why would I want to go through an IPO? So customers were mentioned, investor liquidity is another option, hiring was mentioned earlier. All of them are great answers. But in today's market, you can actually get early investor liquidity from the private market, right? Customers are opening up to SaaS and cloud companies, and maybe they don't need that IPO stamp of approval yet, at least for us. And we were approached by SPACs and had the opportunity earlier this year to go through that. We've seen other companies at our revenue rate, maybe even less mature companies, go through that process. But we decided that if we want to do this, to build for the long term, we want to do this right? And in order to do this right, we need to also ask, what happens the day after the IPO? Right? Do we have the right governance internally, right? Processes, tools, and structures. Also externally, right? We are an enterprise sales company. We grow through 7-figure deals, and if we miss one deal push it by 1 week, we may miss a quarter by 30%. That's not good for a public company, right? So we decided to take a couple of years, raise a substantial amount of money in a really good evaluation from strategic investors, and then take 2 or 3 more years to build this right. And that's the journey we're currently on.
Okay, and Asaf, obviously you're also focused on growth right now, but not committed towards going public. What would the pros and cons be for you, in making that kind of decision?
Yeah, so I think I'm happy to be last on this one because I think we heard some of the
Right.
pros and cons. So I think from our standpoint, in terms of where we are, I would say scale, top line, and growth, we're practically there. And I think that the potential pros specific to us as well are acquisitions. So we have just announced our 5th acquisition, and we feel that public market currency and being public could really help accelerate and generate more acquisitions. In our space, it's also really key, kind of in sports and tech-enabled sports space. It's really key to kind of take the brand to the next level. So that's some of the pros. But then, as Asaf mentioned and Sarah mentioned, really picking the right timing, not being in a rush, making sure that the company is I would say the financials are very predictable, the timing is right. So I would say that's on the other side, because again, if you do it too early, obviously we've seen some of the risks. So we're still debating whether or not that's I would say the timing and whether or not it's right for us. So I think that's the way we look at it right now, and I guess over the next few quarters we'll keep you posted.
Excellent. So I'd like to ask all of you really the same question. We'll go one by one. We've been quoting Stan Lee and Spider-Man. Great power comes great responsibility, but responsibility to who? And it can be anybody. It could be government, stockholders, clients, employees. I'd like each of you to take a minute, even less, to kind of express who you feel that responsibility to.
Cool. So I love my investors, first of all. And I do feel some responsibility to them. I think much more I feel responsible for my own team. Right? We're growing very quickly. We're adding more and more people globally. But even more than that, I feel responsibility for the whole industry that we serve. Right? So the men and women on the production lines that can sleep better at night, knowing that the plant will not go, will not a fire break out. And then also for the CIO or supply chain executives that want to transform, are not really able to, and are counting on us to help them in their own personal journey. I think they are who we really feel responsible for personally and as a company.
Excellent. Asaf?
The way I look at it, if you're really committed to your customers, you're basically serving everybody, because you're serving the company and you're serving the investors, because you're just going to keep on creating great product and producing more value, and you're taking care of your your team because they're engaged and they're growing and it's interesting for them. They're developing. They're going to end up. Everybody's going to end up making money because you're just going to keep on growing the business. So I think that's the core. Being customer obsessed is basically serving everybody.
Excellent.
So again, I have to be careful because we have our investors in the room. So of course, that's a key thing, key consideration. And we also have some of our employees here, and we want to be around over the next few decades. So no doubt that the employees, we want to make sure that it's still there, the culture and so on. I think that specifically in our case, also we would also look at kind of the external community because we deal with technology and content and sports. We have hundreds of millions of passionate fans and a kind of community-oriented engagements. And we feel over the last couple of years, you see here in the States, issues of diversity and inequality. And it really does touch many of the things that we deal with on a day-to-day basis. And I feel that we also have to take that part into consideration going forward. And so that's another key one for us.
Thank you. Sivan?
Yeah, so I would just take the last part of what Asaf said, because I think it should be really a goal of the ecosystem to get more diversified and to include more diversity and minorities into the tech world. This is our responsibility towards the community, towards the Israeli economy as a whole. And this is really up to us to qualify and to include minorities into startups.
Thank you.
Right, so Asaf nailed it, I think, on customers. I wake up thinking you make the customer successful, you're going to make the shareholders, you're going to create value for the shareholders and employees, and you cover everybody. So we're obsessed about customer success. On a personal side and related to this panel, I think when we went public in 2014 and in the year that followed, it was after a drought of IPOs coming from Israel. And I kind of took it on I kind of enjoyed the role of talking more about Israel as scale up. Now everybody's using it, which I'm happy about. But that Israel can generate scale up companies that are truly global in culture. Employees at CyberArk don't feel that they are in an Israeli company. They know that it's an Israeli root company, but we built a global company. So building a global company and showing the beauty of scale-up nation, and giving and talking to a lot of entrepreneurs that if you have the right idea, go along. You can build something big. It's something I like to do a lot.
Excellent answers. Thank you all very much.